There's so much drama in crypto, right? First, we got this massive rally with Trump announcing the strategic crypto reserve. Now the big disappointment, we've lost all of those gains. The question is, what's next? Let's have a look at some data most people are not considering. Let me share how I navigate this market. Today, pretty much everything is down. And it's not that different for this week. Even this month, there were not a lot of cryptocurrencies that actually made money. Here's the rally caused by the announcement of the crypto reserve. More than 10% in gains, but now we're back down. More than 11%. Here's the announcement in case you've missed that. So this is the Donald J. Trump Truth Social account. A US crypto reserve will elevate this critical industry after years of corrupt attacks by the Biden administration, which is why my executive order on digital assets directed the Presidential Working Group to move forward on a crypto strategic reserve. That includes XRP, Solana, and Cardano. I will make sure the US is the crypto capital of the world, make America great again. And then a follow-up, obviously Bitcoin and Ethereum as other valuable cryptocurrencies will be the heart of the reserve. I also love Bitcoin and Ethereum. Now there have been a lot of question marks around this announcement. First of all, it's written in the first person as in I love Bitcoin and Ethereum. It doesn't seem like Donald Trump himself wrote this tweet. Secondly, when the Presidential Working Group is working on the reserve, why already announcing those assets that the reserve will hold and then let other people potentially front run? Some things don't really add up. And so I had my strong question marks around this as well. Have a look at this here. This is an announcement that I made to the premium members of this channel. I am adding another short, Cardano versus the US dollars. More details are in today's premium update video. So that was yesterday. The announcement was made at 11:22 local time. So that's Hong Kong, which is 3:22 UTC time. So this is what TradingView works on. Since then, it lost almost 25%. Cardano was one of the assets that got majorly influenced by the announcement. And so it's also one of the assets that went down most once reality kicked back in. And so this was a pretty straightforward short, very quick money in a short amount of time. I share my trades regularly in premium and I tend to bet on falling prices recently quite often. Now most influencers don't share their data, or they might share it when we are in a bull run and everything is going up, and of course their portfolios go up as well. But very few people actually share their data in relation to Bitcoin. How much do influencers actually outperform Bitcoin? But I want to share this data over here. Have a look at the performance in the last 42 months. Every data point shows the monthly alpha over buying and holding Bitcoin. So sometimes we outperform buying and holding Bitcoin a lot, sometimes we underperform. And this dotted line here, that's the 12-month moving average. Now when we average all of those data points, we come to an alpha of 1.9%. And so hopefully this gives a realistic picture of what active speculation actually means. It means a lot of volatility. It means that sometimes we underperform, but the most important thing is that over time we still make our nice gain. And so just quickly, in addition, right, currently premium is $125 US per month. How much money should you have in crypto to be at least break even? Let's say you're not interested in the tutorial videos. Let's say you only want to copy trade. What kind of portfolio is needed? And the math is pretty easy, right? It's $125 US per month and the alpha is 1.9% on average. So you break even with a crypto portfolio of $6,578. If your portfolio is larger than that and you currently do not beat buying and holding Bitcoin, then that's your reference point. Now let me show you why I was so skeptical of this rally and why I added this short position of Cardano. What we've got over here is the stablecoin market cap. The stablecoin market cap measures how much money is flowing in and out of crypto. So whenever you have your fiat currency and you send this to a centralized exchange, the centralized exchange might take custody of that fiat and then in exchange issue stablecoins on the blockchain. So very often there's a third-party custodian in between as well, let's say Tether. So the centralized exchange sends over the fiat to Tether. Tether then holds this in an account and Tether then creates the USDT stablecoin on the chain. And we can see the creation and the destruction of stablecoins on chain directly on this chart. And of course, when there's less and less stablecoins over time, that means that people on average tend to withdraw money from crypto. In October of 2023, this turned around. That's when crypto started to expand. This is also when we started to buy quite a bit of crypto. But have a look at the last few days. This didn't really change. So for roughly 1 month, we have seen pretty much zero growth. And the announcement of the strategic crypto reserve also did not bring any growth whatsoever. The only thing that changed was the money that's already in crypto that got deployed. So what we see over here is a chart of roughly 15, 16 months of the stablecoin dominance. So this now measures the swapping activity within crypto, right? The stablecoin market cap just looks at how much money is flowing in and out of crypto, but the stablecoin dominance shows us how much are people risk off. When a lot of people are risk off, when a lot of people have sold their altcoins and they hold stablecoins, then the stablecoin dominance is very high. When a lot of people deploy their stablecoins, they buy altcoins with it, then the altcoin market caps go up, and then the stablecoin dominance is pretty low. Because when you deploy, say, $100 worth of stablecoins, then the market caps of altcoins tend to go up much, much more. There is an inherent leverage effect in crypto. In other words, we want to sell when the stablecoin dominance is very low, so this means people are risk on, and we want to buy when the stablecoin dominance is rather high. So this is when people are very much risk off. We have seen a massive wick in the last few days, right? This is when people suddenly started buying crypto because of that announcement, and now reality kicks back in. But we are not yet at super elevated levels here. In other words, there is more room to become more risk off. Prices can go further down. That is what I'm personally currently speculating on. This is how my portfolio is set up. Now there's many red flags in the crypto space right now, and that's why I'm risk off. Of course, not a lot of money flowing into crypto. The stablecoin market cap not going up is a problem. But secondly, we also see how Ethereum tends to perform worse and worse over time. And there is a fundamental reason for this. And there is a lot of correlation between Ethereum and the altcoin market. A lot of altcoins are linked directly via liquidity pools with Ethereum. What we see over here is Ethereum relative to Bitcoin. This arrow is the move from proof of work to proof of stake. So that was very, very bad for Ethereum's performance. But we are not yet at the levels that we saw in August of 2019. We are going down rather rapidly. So there is more room for potential underperformance. 34% underperformance for Ethereum, which is probably much worse for a lot of other altcoins that are smaller in market cap. Again, the smaller the market cap of an altcoin, the more it's sensitive to the general macro environment. Why is Ethereum performing that poorly? Why is it going down? I think the main reason is this over here. This is the staked Ethereum over time. And there was a lot of staking happening. A lot of people locked up their Ethereum to get some of those gas fees as rewards. But that has stopped. There has been a real change since Q4 of 2024. The staked Ethereum isn't growing anymore. People rather tend to unstake ETH. And that unstaked ETH, of course, directly hits the market. This is how staking fundamentally works, right? When there's a lot of supply that gets locked up via staking contracts, then that supply isn't liquid anymore, and it should, in theory, push up the price. Now, when that illiquid supply suddenly becomes liquid again, then that hits the market, right? Then we need to get the adequate demand as well for the price not to go down. But that's what's happening, right? People simply just unstake, they add more supply, the demand is not there, thus Ethereum tends to do worse than Bitcoin. And that then is, of course, then also bad for the altcoin. We are really not yet at maximum pain. What we see over here is the Bitcoin dominance, and it continues to go up. So more and more of the entire crypto industry is now simply just Bitcoin. So the rest, all the altcoins and Ethereum, they become less and less important over time. And when this is crashing, this is when we have altcoin season, right? When Bitcoin is not outperforming anymore. Unfortunately, those kinds of Bitcoin dominance crashes, we tended to only see when Bitcoin dominance was very, very high, above 70%, around 72. Currently, we are only at 61%, and it might take several months until we hit those high levels again. That's why we want to be more risk off. Just have a look at the Trump token, right? This is Trump relative to Solana. It was a pretty straightforward pump and dump, and if you didn't buy in the first few hours, you might have lost. Now currently a lot of the supply of Trump is held directly by the market makers, and so it simply just reflects the Solana price. So again, this is Trump relative to Solana. This is not the US dollar price. But here's the issue with Solana. What we've got here is a long-term chart of Solana's dominance. So how much of all of crypto is in SOL. And there seems to be an invisible ceiling where Solana has a very hard time climbing above that at around 3.6%. And unfortunately, the volatility here is very, very large. This is a drop of more than 80%. Solana underperformed the rest of the market by more than 80% in the year 2022. And currently, we tend to rather bleed again in the dominance. There were two supporting events, right? This one over here, this is when the Trump token got launched on Solana, and this over here, which was the announcement of the strategic crypto reserve. Without those two events, Solana's dominance would already be way lower. And I believe that very likely in the not so distant future, we will see this further go down, because all of that meme coin trading is now starting to slow down. The pump.fun ecosystem, which generated a lot of attention on Solana, a lot of activity, that's now rather dying, because unfortunately a lot of people have lost with meme coins. It's a player versus player market. Most people tend to lose, just a few people tend to win. And once the capital is with the winners, there isn't that much more activity going on. Here is how I personally make money in this market. It's simply betting on falling prices. Ideally, even falling prices of relative valuations. So not in US dollars, but relative to Bitcoin and Ethereum. And the reason why we want to do relative valuation shorts is because in the end, what we want to play is the tokenomics game. We don't necessarily want to just bet on the macro, we want to bet on tokenomics. We want to bet on altcoins doing worse compared to Bitcoin. Those kind of charts tend to have much less volatility. So when we just look at US dollar charts, we tend to see a lot of up and down. Right? We tend to see when Bitcoin is going up or Ethereum is going up, how the altcoins go up as well. But when we look at relative valuation charts, the volatility isn't that big. It's very, very muted, and we tend to just see long-term underperformance. And we can make money when something like this is going down, right? When Balancer relative to Bitcoin continues to underperform. And I opened this position a long, long time ago, in the middle of 2023. And then I added more to the position, and now the underperformance tends to slow down somewhat. That's why I'm now also sharing this in YouTube and not just in the premium membership. In premium, we are now shorting other altcoins. But yeah, this is how the game works, right? The supply of Balancer goes up over time. There's more and more tokens that get issued, that go to insiders and to the team and to users of the platform. And if there's not enough demand for the Balancer token, then it simply just underperforms over time. And this is how we can make money, right? We can take advantage of that underperformance. That's how those 1.9% alpha per month over buying and holding Bitcoin get generated in bear markets. In bull markets, it's a bit different, right? In bull markets, we do wallet tracking. In bear markets, we play tokenomics. So feel free to check it out. There are more than 100 tutorial videos in premium. It's not just about shorting altcoins. It's also about risk management, risk mitigation. I don't use leverage at all. I'm very conservative. If you're okay with leverage, you can probably get more alpha than that. But still, right? It's all about being properly set up. Alpha doesn't just come out of nowhere. We want to be better than the average market participant, and we want to have a proper strategy during times like this when the market itself is not expanding. I am, of course, sharing my own trades as well, as already said at the beginning of the video. And I understand how a lot of people overpromise and underdeliver. That's why there is a 1-week money back guarantee in premium as well. So if you don't like premium, just message me within the first 7 days and I'll refund you 100%. There's really zero risk for you. Looking forward to seeing you in the next video here on YouTube. Feel free to subscribe. Looking also forward to seeing you in premium. A like would be very much appreciated as well. It helps the channel grow. So see you next time. Cheers.